In this video, we are going to be talking about the Tallahassee rental market for multifamily properties. So you can see where the Tallahassee metro statistical area is drawn out. You can see that we have this dotted line right here. That is the Georgia state line. And then we get into the panhandle of Florida here. So this is considered the panhandle. This is North Florida, Central Florida. So we have Orlando, Tampa, Jacksonville. Here's Atlanta up here. We've got Augusta here, Charleston and Myrtle Beach over here. Columbia, South Carolina is here. And of course, we have Birmingham, Montgomery, and Mobile and Pensacola over here. So you get an idea of where the Tallahassee market is located, the metro statistical area. And if you know anything about Tallahassee, you know that it is the capital of Florida, as well as a student market. It is where Florida State University is located. So let's go take a look at the filters. And as we look at the filters, you're going to see that, like everything else we do, we're excluding corporate, military, senior, and vacation, and that we are only including market and market affordable. If we scroll down, you can see that we are looking at all three asset classes first. We do not look at the F class. There really isn't anything categorized as F in most of these markets, so we don't take a look at it anyway. And if we go up to location, you will see that we are in market, metro statistical area, Tallahassee, Florida. So we'll look at the combination of all three asset classes together, A, B, and C. And then we will go into each individual asset class, take a look at the Class A's first, then the B's, and then the C's to see how this market is holding up for the rental properties for conventional apartments. So that said, let's go take a look at our analytics and see what it has to tell us. So here is our supply side snapshot. You can see that there are 853 properties in this market, totaling 24,151 units. There are currently 946 units under construction, and in the last 12 months, 100 more units have gone vacant than have rented, and in 2021, they had 981 more units get rented than went vacant. We call this absorption. We can see that in the vacancy rate because the vacancy has increased from 6.8% to 7.9%. And although we are still showing a growth year over year in rents from 1164 to 1221, we'll see what the quarter over quarter data shows us. As usual, we will not be looking at the capital markets, which is this data here. We are only looking at our supply side data over here for the rental market. If we scroll down, we can see that the long-term occupancy average over the last 22 years is 89.73%. So basically 90% occupancy is stabilized occupancy for this market, and it is currently at 92.07%. So it is slightly above the long-term occupancy average. Looking at the decline in absorption from the period prior to this, and with rent growth showing here, I would place this, before looking at the data, in the oversupply side of the market cycle, but we'll take a look at the data and see what it tells us. So let's go look and see what all Class A, B, and C data shows us. So here is the rent analytic for all three asset classes. We do not look at asking rents. That is what the owner wants to rent it for, but the effective rent is what they're actually collecting in rents. If we look at first quarter of 2022, it started at 1168, went up to 1222, up to 1241, and then started that downtrend. So down to 1212. So we'll take a look at deliveries and absorption and see if it tells the same tale. And it does not. So we can see that there were really no deliveries in the market, and that only 179 were delivered. And even though there were no deliveries in the market, we're having kind of an exit stage left situation happening here. where you've got more people leaving the rental market than are actually renting. Here in the first quarter was the only quarter in the last 5 quarters that they actually rented some units, and that was coming off some really strong absorption for 3 straight quarters in 2021. So not sure why this happened, although 22 Q1 starts the second semester of the school year. Not sure if that's the reason they absorbed or not after going in decline in the fourth quarter of 2021. No way to tell that information here. But we are seeing an exit of the renters in this market. There isn't a whole lot going on here economically other than, again, it is the capital and Florida State University. Now, universities all across the country are getting smaller. They are not getting larger in student counts, so that may have something to do with it, especially in the third quarter, having this reduction, albeit small numbers comparatively. This could have been students that did not return for the next year, and really could have just been seniors, but could have been more than that because obviously they went negative absorption, meaning more people left the rental market than came into the rental market. Small numbers, but still negative absorption nonetheless. So we're seeing a decline in absorption. We're seeing an increase in vacancy and a decrease in occupancy, and these negative absorption numbers show that, and now we're finally seeing a decline in rents, which we should have been seeing for 2 straight quarters, not just 1 single quarter, but I think we're going to continue to see that downtrend as the market moves forward. So let's go take a look at the Class A space and see what it is telling us. So here's the rent analytics for Class A properties. You can see that there are 12 properties in the market totaling 2,295 units. Looking at effective rent, you can see that they started at $1,635, went up to $1,735, and for 2 quarters straight, they started trending down, albeit small, from second to third quarter, quite a bit more from third quarter to fourth quarter. So we are seeing that downtrend happen in the Class A market. So let's see what deliveries and absorption tell us. So there were no deliveries in the Class A space, and we had, 99 units absorbed positively and 71 units absorbed negatively. So we had positive absorption for the 12-month period in 2022 of, about 28 total people moved into the market than actually left the market. So 28 more moved in than had actually left. So some slight 12-month absorption, but we can definitely see that we are losing people in this market. And even with the small positive absorption, again, it is small, albeit so is the negative. If we look at occupancy, we were at 93.2, went down to 91.9, up to 94.3, down to 92.5. So kind of a roller coaster happening here, and this absorption tells us that. So we saw that in our rents when we looked at the effective rent, where we just had this real small decrease, but then that larger increase of, or a larger decrease of those rents going into that fourth quarter, and the data is showing us that. So the A's are reacting properly to the negative absorption. Let's see what the B's tell us. So here is our Class B rent analytic data. Again, just looking at effective rents, we can see we were at $1,176 at the start of 2022 in the first quarter, went up to $1,230, up to $1,253, and then down to $1,233. So kind of follows the overall trend. You can see we have 416 properties in this market, totaling 15,601 units of Class B conventional apartments. So let's see if we can see if absorption follows this uptrend to third quarter and then the downtrend into the fourth quarter. And if we look at it, it does not. That's interesting. Now that negative absorption, it does. So you see here we have 179 deliveries and only 18 units absorbed. And then I'm not looking at the fourth quarter numbers because it's just too soon too early for that data to show anything, so we're just going to stick here. So this, for 3 straight quarters, this market is declining, and we're seeing that in the numbers: 93.4 in the first quarter, 93.3 in the second, 92.3, 91.3. So we are steadily decreasing in occupancy, increasing in vacancy, and the absorption is showing us that. So it looks like we should have seen a slowdown in rents, or a decrease in rents in effective unit or effective rent right here from 1230 to 1253. But we definitely got that reduction going into the fourth quarter. So that definitely says that this market cannot handle negative absorption, that the rents are definitely coming down because of it. So A's and B's are telling us a downtrend. Let's see if the C's follow the rest of the Sun Belt. And we see negative absorption in all 4 quarters with positive rents in all 4 quarters. We've been seeing that a lot, but let's go see what the Class C space is telling us. Maybe I'll be surprised. So here is our Class C rent analytic data. There are 387 properties totaling 6,208 units. In looking at effective rent in first quarter 2022, it was $875, up to $899, up to $919, and then down to $888. So actually lower than it was in the second quarter. So we are seeing that downtrend happen, which we don't see a lot in the Class C space for the Sun Belt. So that tells me that this market is very sensitive to that absorption data. I'm going to guess that we're negative absorption in all 4 quarters. I have not seen this yet, but let's go see. Oh, my guess was almost right. We had a positive 9 in the first quarter, but then negative absorption for every quarter after that. Again, small numbers, but still not growing, definitely trending downward, and I believe it's going to continue to do so. Now, Tallahassee is a little bit different than most of the markets we look at because this is a student market, but it's also a government market. Now, you got to be careful with government markets because your median household income for government employees is not going to be very high. And of course, with students, you rent on a per bed basis, not a per unit basis, although there are many properties that do rent per unit to students that are near the Florida State University campus. This is not a very large geographical area. So with the 850 plus properties that we saw are in this market, this does tell a story that this market is sensitive to negative absorption and that the rents are declining in all 3 asset classes, that we've had negative absorption in all 3 asset classes. So this market is telling these owners, these rents are too high, we can't afford this. And so they are now doubling up and renting with each other, causing this negative absorption situation because there's just nothing economically happening, either positively or negatively, that I know of going on in Tallahassee right now. Tallahassee's only 4 hours from me, so it is in markets that I pay attention to, okay? So that concludes the Tallahassee metro statistical area. I definitely agree with our supply side snapshot. The Tallahassee market is in oversupply. It is north of the long-term occupancy average. I would place it 1 point above it because it's still 2% from that long-term occupancy average, but it is trending down towards it. So I think in the next quarter or two, we're either going to see it on that long-term occupancy average, maybe even slightly below it. Time will tell. Stay tuned tomorrow for the Montgomery, Alabama market. So another market within 4 hours of my house. Montgomery's only 2.5 hours from here, where I'm located in Mobile, Alabama. So another government market that we will look at. Montgomery is the capital of Alabama. So 2 government markets in a row between Tallahassee and Montgomery. I will see you guys tomorrow.